Hi everyone, let's focus on my low time frame scenarios, but starting with the medium time frame ones to give you a little bit of perspective. Starting with this one over here where we're looking for this green wave 5 to end or has already ended, and then we're looking for a little bit of a retracement to the downside. In this green wave 5, we then have the blue wave impulsive structure, which is a wave 1, 2, 3, 4, 5, where wave 1 in this scenario is extended. Therefore, the targets of a wave 2, 3, 4, and 5 are changing, but all of these targets have hit their most common target area for wave 2. That's these fibs over here, and for wave 4, those are these fibs over here. The most common target then for the blue wave 5, which then would finish the green wave 5, is between the 0.618 and the 0.786, which is pulled from the low of wave 1 to the high of 1 to then the low of wave 2. Now these fibs are basically between 28.9k and 30.4k, and as you can see, price has already wicked in this area, so wave 5 could already be finished over here, and we are now still in a corrective structure for eventually more downside to come. Now the potential trading setup with this scenario based on Elliott Waves, no financial advice guys, is this one over here when one would enter potential shorts in this area, laddering them in, stop loss safely above, eventually trading to the downside, but keep in mind that we are still in a bullish market structure. The very bullish scenario on the medium time frame is that we have wave 1 over here and 2 over here, which are high time. That's a very high time frame count. And then we have the green 1, 2, followed then by the blue 1, 2. And I will zoom into this scenario on the lower time frame counts in a second. So let's continue to the more lower time frame counts and actually get you through some of what has been happening over the past couple of hours and days as well. The first scenario I like to show you is an alternative. So in this particular scenario, looking into the local structure, this can be an impulsive move, but I've basically been looking at the corrective structure over here, where this then is a W followed by an X, and then we'd be looking for a 3 wave in Y. Now honestly, this Y would be very, very long compared to this W, so that's the reason why this isn't necessarily a preferred scenario. Because usually wave W and wave Y have a time relationship of like between the 0.618 and the 1.618, which basically means that if you get the trend-based fib time and you pull it from the high over here to then the low of W to then the high of wave X, you're basically expecting the wave Y to end between the second blue line over here, the 0.618, or the 1.618. So wave Y over here would then be very, very long compared to wave W, which is quite uncommon. So this is therefore an alternative scenario, but the potential setup is finding support in this area over here, where there's also a target box between 27.162 and 26.9k. So there's a little bit of support over there in case price moves to the downside. If we then look at the second scenario I like to show you, this is the more impulsive scenario. Not a very impulsive yet, because in this particular scenario, we'd be looking for some sort of an ending diagonal in the 5. So this is then a wave 1, 2, 3, 4, 5 ending diagonal to then finish the green 5 and look for downside. In this particular scenario, the corrective structure is already finished with then a WXY, W being a zigzag structure. Wave X is then an expanded flat over here with a 3 wave, a 5 wave move to the upside. And then this wave Y is also a zigzag. Now this zigzag did hit the rare target and not the common target. So if I quickly pull the fibs on the chart, wave C zigzag, you can see over here it's quite dark. Let me put a 1.618, let's make it a little bit lighter. You can see over here the 1.618, that is a rare target for a zigzag. The most common target for a zigzag is between the 1 and the 1.236. So the fact that this zigzag went this deep is actually not preferred, like it's not nice to see, it's not as common. That's why the target is rare, of course, but of course it can happen in the end. We're trading Bitcoin, so volatile, and it's still a target for a zigzag. So that would then be the end of this wave Y, which in this particular scenario is then also the end of a wave 2, and we would be looking for upside. Now this is also the scenario that I actually mentioned in my video last night, where this was then my preferred scenario, so basically 2 videos ago, where I mentioned, okay, if price is coming to the downside, the potential trading setup would be to start entering over here from the target box that I had to the downside, stop loss below, and then trading it to the upside. So the invalidation is below this low over here, which has not been hit. It did get close, of course. We actually went all the way down to the 886, pulled from this low to this high, which is a very deep retracement, but it hasn't been hit. And now we're moving, at least for now, to the upside. So make sure you trade safe, have your entry requirements and your own trading plan. Then we move to this scenario over here, where this is basically an ABC. This is one that I actually quickly thought of this morning, where in this scenario wave 5 is already in. This is then a 3-wave move in A, so we have the WXY inside this bigger A. We would then be looking for a 3-wave in the B before then a move down in C. So this is then going to be an expanded flat A, B, C. Most common target for the wave B is in between the 1.236 and the 1.38, which is between 29.5k and 29.8k, which is also in general an interesting area. If we then go to the very bullish scenario, which is, I don't know, you know, it's taking so long already, honestly. But then we have wave 1, 2 over here. I keep repeating this stuff in the videos as well. We have another 1, 2 in green, another 1, 2 in blue. But now what is new is that we have a white 1, 2 as well in this video. So at least something new to talk about regarding this scenario, where this is then a wave 1, this is a wave 2, and we would now expect a very big move to the upside. That is what we want to see. Now this scenario has 3 main issues. Wave 2 over here is very short in time compared to the time it took to develop wave 1. This wave 2 is only 23% of the time it took to develop wave 1, which is very rare. This wave 2 retraced to, well, the 0.382, but actually it just missed out on hitting the 0.382. The 0.382 for a wave 2 in an impulsive structure is already a very rare target. But not even hitting it, of course, makes it even more rare. And then the blue wave 2 over here also hit the rare target, which is the 0.382 of an impulsive structure. So yeah, we have 3 rare things happening in one scenario. So that makes this scenario not very likely. And that's why the medium time frame count, my preferred one, is the more bearish one, where eventually we get a little bit of a retracement. We've been ranging for a while as well, taking the double lows, taking the double highs. It's quite a difficult range by this moment because there's so many possibilities. But in this particular scenario, with this trading setup, one would look to enter the longs in this setup to then stop loss below the lows, trading it to the upside in a mega bullish move to the upside. But at the moment, as long as I don't see a big ass breakout, it's just not as likely for the Bitcoin price and the Bitcoin chart. And if we then move to the lower time frame bearish scenario, then we have a high of wave 5 over here. This then is a wave 1 followed by an ABC wave 2 before then a 3 to the downside. Now in this particular scenario, what is not that nice is that this wave 1 is not a very nice clear leading diagonal. So we have a leading diagonal where basically the lines are diverging to one another. And this is by far the most common type of a diagonal in general. You also have the expanding diagonal, where actually the lines are not diverging but actually expanding from one another, which is a lot more rare. And in this particular scenario, because this wave 3 over here and potentially then a 1, 2, 3, 4, 5 wave 1, this wave 3 is longer than wave 5, which means that it should then be a expanding diagonal, which is very rare. So that is not very nice in this wave 1. Therefore, this being a 3-wave structure, and then a potential 3-wave structure is actually like a nicer scenario. But in this very bearish scenario, this is just the way we count it, like it's an alternative, right? So I did have the video of this morning when price was ranging at the downside, where I said, well, you know, looking at downside, yeah, it's not looking too great, of course, because the retracement went all the way down to the 886, very close to wave 1 over here. We also pushed through this wide target box, which was support for a bit and could have acted as resistance. But I kept my Discord group very well up to date as well with some of the thoughts and talking with all the other guys as well, sharing their scenarios. And I think what is important to know is that with the scenario that I showed in the video this morning as well, which is this one, as long as the invalidation for an Elliott Wave scenario is not hit, it is still valid. And that is very, very important, because also with trading in general, a bit of trading psychology in the middle of this video, but with trading in general, what many people do in certain scenarios is they're closing early. and they leave so many profits on the table if that happens, because people get scared or whatever the reasons are, right? Very often it is emotional, where I can imagine if people have their own plan, their own strategy, and they enter this potential trade, for example. Now, I don't trade Elliott Waves because I have a separate personal trading plan and strategy for my personal trading, but I use Elliott Waves for a bias, up or down, of course. And in this particular scenario, if someone would have ended over here with a long, price moves to the downside with quite a bit of volume. Like, it wasn't bad. Of course, the volume to the upside now is bigger, but hey, volume over here was a little bit increasing. You can imagine people get scared. And what do? People get scared over here in this area. This is then the place where they go out, they take the loss, but then price moves to the upside and they're like, shit, you know, I should have stayed in, I should have done this, I should have done that, I should have stuck to my plan, because I had my plan, I had my entry requirements, everything was good, but now I'm out and now I'm gonna FOMO all the way in up here, but now maybe price goes down again and actually continues to the downside, and now I got like triggered both ways. I lost over here and then I get another loss over here, and it's, you know, emotions in trading can be very, very difficult to cope with. So also make sure that if you have a trading plan, that you also have certain rules in place that avoid you, or I should say that avoid your emotions to take over and make wrong decisions in your trading. Because in the end, there's always going to be, at least with Elliott Waves, multiple scenarios possible, but also in your trading, there's going to be scenarios like this one where you're entering higher, price goes down, does not hit your invalidation, and now you would be in profit again. And if you would close now, you'd have a small profit. So make sure to stick to your plan and your trading requirements and your strategy, whatever you do. So yeah, these are the 5 scenarios I have on the lower time frames. I do have to say that we do have big bullish divergences on the higher time frames. Now, of course, these can be leading, but I should at least show you that also between this low over here and the lows over here, you can see the CVD lines are going down, 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 while price is moving to the upside, which is a bullish divergence on the CVD. And the moment it played out is the moment we take the high. So the moment we take this high, that is the moment that these divergences have played out. And please keep your eye on the news. Today, 4 p.m. Central East European time, you got to check your own time zone for this, but the link for this website is in my Discord. We have high impact news coming, but also on Tuesday, also on Wednesday, and also on Friday, there's high impact news. So it's probably going to be quite a volatile week. So whatever you do, be safe out there. But for now, I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye-bye.